memory and core. The RTX 5080 is minus
What's up, Andrew? Are you still in Texas? Good to see you here. Sasquatch, what's going on, dude? Welcome to the stream. Imperito, welcome to the stream. That's a new name to me. Spec Mining, good to see you. Level Fawn. Hello. Heavy Flavor, welcome back. Good to see you back in chat. Chuck Danger, what's going on, my man? Tepper in the chat. Good to see everybody here. All the regulars. I barely even make content anymore. When are we gonna get that fixed, huh? It's a money problem. We're not gonna lie. Money and health. That's what happens when you get closer and closer to 40. Money and health. Rex. What's up, Crypto Jacker? Welcome to the stream. Tuberworks Jones. Welcome back. When Flux 2K. Yeah, when Caspa hits $1. Nicholas. Yeah, not a fan of meme tokens. What can I say? It is what it is. Ah! There we go. Oh, yeah. Hello and welcome, everybody, to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Matthew in real life and Blind Run on the internet, and today we're going to talk about crypto because it's been a week. So, you know, that's how we do it. We're going to be talking about the Federal Reserve withdrawing crypto guidance for banks. We're going to be talking about Qubic being now announced and verified as the fastest blockchain currently out. We're also going to be talking about miners and miner stocks and all that fun stuff and Bitcoin ETFs. We got halvings for AIDP coming down the pipeline. We have a new project that we're going to take a look at that's mineable via a GPU called Gemma. And we will be taking a look at the 9060 XT, as well as what's going on with China and AI chips, specifically to fill the void of NVIDIA. We also have the RX 6500 leaks coming out, and a new release from SRBMiner. This one's going to be version 2.8.4. And then we'll be talking about the recent Bitcoin pump, which, yes, I did call. So, woohoo! I said we'd go down to as low as 72K. Running up to April 20th, and then we'd start to recover on April 20th, and I did not expect to be as exact as I was, so that's good news. That means that what I planned out for my farm should be hopefully viable, at least, and we can talk about that near the end if you want. $635 million was liquidated in 24 hours as traders predicted 100K Bitcoin. Ethereum bounced back as market dominance recovers from an all-time low, and Australia's top court sides with block earner and dismisses the ASIC appeal. That'll be important. And then we will talk about spot Solana ETFs. And apparently there's going to be staking enabled for that, which is going to be really interesting. And then I wanted to take a look at Looking Glass. Specifically, we're going to be doing a reaction to Level 1 Tech's Looking Glass video and taking a look at what's going on there. For anyone interested in KVM, you know, kernel-based virtual machines, this is a pretty fantastic revelation that is coming to light here and may impact mining. not too far on down the line. But before we get into it, let's go ahead and mention that if you want to support the channel, you can support it directly over at sonofatech.locals.com. And I will be trying to get back to posting more guides over there as my health is beginning to recover. Of course, I do got to get back into the day jobs and stuff like that. For those that of you that are not aware, I'm currently on short-term disability because of ankylosing spondylitis and some fusion that was happening in my spine. Plus, I have to get surgery on my SI joint on the 30th. So a few little pending things going on, but hopefully we'll get that recovered and up and going here soon. Just health struggles are health struggles. Everybody's got them, so we're going to push through them. But first topic today is the Federal Reserve withdraws crypto guidance. There we go. For banks. So this is big news. The Fed is rescinding its supervisory letter from 2022 that called for notification in advance of planned or ongoing crypto asset activities. The U.S. Federal Reserve has announced it would withdraw guidance for banks engaging in crypto asset and stablecoin related activities. Quote, the board is rescinding its 2022 supervisory letter establishing an exception that state member banks provide advance notification of planned or current crypto asset activities, end quote, the Board of Governors of the Federal Reserve explained in an April 24th statement. Any crypto-related activities will now be monitored through the Federal Reserve's normal supervisory process, it said. The Federal Reserve is also rescinding its 2023 supervisory letter that impacted how state banks could engage in stablecoin activities. Now, cryptocurrency and banks aren't, inherently supposed to get along via the white paper of Bitcoin. And that is because obviously in the white paper, it mentions that Bitcoin is to enable transactions between peers without the interference of banks or governments. That being said, if you were running a Bitcoin mining business, etc., or a crypto mining business, it put a lot of people in a lot of awkward positions with this one in particular and the way banks viewed cryptocurrency. In fact, I have a bank account, for example, for my YouTube channel, but I couldn't get a bank account for my crypto mining farm. So when I got a lease for a building that was to mine cryptocurrency out of, I actually had to get it under the LLC for the YouTube channel. And then I was able to add the other LLC onto there. It was a kind of a workaround, but it was very frustrating. And hopefully some of that stuff lightens up because not everybody has a YouTube channel that they can put that under and put that LLC under something else. Now, a lot of cryptocurrency mining strategies at the lower level are in tandem with some other sort of business, and that probably is the best way to operate it and utilize Bitcoin mining as an ancillary revenue generation if possible. Of course, with the energy costs still being extremely high, I'm not so sure how viable that still is in the United States. And it's been a problem, on the Bitcoin mining space and the GPU mining space. If you guys haven't seen, a lot of people are getting out of GPU mining, including large CMP 170HX farms. And if you're curious, by the way, there are some group buys going on at Coastal Crypto, and they are selling a bunch of CMP 170HXs. I believe it's at least 6 cards. And if you buy 6 cards, it is under 400. I wanted to say it was between 350 and 375 per card. And then also, Django has a client that's selling their cards, I think, as low as 300. So I know you can go to Coastal right now, tell them I sent you. They'll know what deal that they're looking at. If you're curious about, picking up maybe 6 of the CMP 170HXs to build a little 6-card rig for, in hopes that, a memory intensive algorithm pops off. Up in the air. Will that happen? We can talk about that a little bit more, but layer one proof of work cryptocurrencies are just not doing that good, primarily due to the fact that all the liquidity is going through Phantom Wallet and Solana meme tokens at this point and not going through traditional exchanges like a Coinbase or crypto.com. We've talked about that plenty in the past, so be sure to go watch one of those videos if you're interested. There is still hope, though, for CPU and GPU miners, as out of nowhere, Qubic has put out a press release announcing that they are the fastest blockchain in history. Now, for those not aware, Qubic is a CPU and GPU mineable cryptocurrency. I have made a how-to to mine it with Hive OS. You can do it on Windows as well. Maybe we can do a tutorial for you guys on Windows if you're interested in that. With, you know, the 4090, 5080s, like 40 series and 50 series really being the top of the food chain for this particular cryptocurrency. AMD not really mining it that well on the GPU side. Obviously, the CPU side mining it pretty well. And this is big news if true. Now, they say it's verified by a third party, and it said it was done on the live mainnet, and it sets a new industry benchmark for decentralized performance. Now, keep in mind, this beats everything out in current existence, which is pretty incredible. We're talking about beating Solana. We're talking about beating even the slated Mega ETH coming out, which is like the Make Ethereum Great Again project. It's going to be extremely centralized that we've talked about in the past. It's apparently faster than all of that. Of course, will people use it is going to be the big question. On April 22nd, Qubic has officially achieved the fastest transaction speeds ever recorded on a blockchain, hitting 15.52 million transactions per second on its live layer 1 mainnet. The result was independently verified and published by Certic, a leading blockchain security and auditing platform. So here is that website if you want to go see if it's valid and all of that. And I have no reason to believe that it's not valid. It goes on to say, unlike many previous tests conducted in isolated environments, Qubic's milestone was accomplished live on mainnet with no rollups, no gas fees, and no layer 2 dependencies. The Qubic team conducted a live stress test on mainnet using its native tick-based architecture. While the test session spanned a longer runtime with many ticks executed, the certified performance result, 15.52 million transactions per second and 1.51 billion transfers, is drawn from the 10 peak ticks verified by Certic. This means that we had essentially a peak transactions per second of 15,527,637 transactions with a total transfer of 1.51 billion with a finality of instant and zero delay. Now, if we compare this to other blockchains, Ton, which has been extremely popular for quite some time as far as speed goes, is at 104,715 transactions per second. Solana is at 65,000 transactions per second. And then we do have Sui, Aptos, and Arbitrum. Sui is one that I've been looking at, or Sui, however you want to pronounce it, quite closely. It is a proof of stake project, but slated to be extremely fast, getting close to 1 million transactions per second, and did recently get added to Phantom Wallet. We'll talk about that too. Qubic is at 15.52, so it blows pretty much everything else out of the water as tested here recently. Qubic's breakthrough isn't just speed, it's capability. The network's unique tick-based architecture delivers atomic consensus, execution, and finality in a single synchronized cycle. This enables use case previously limited by blockchain constraints, including AI compute, DePIN networks, and composable DeFi. Quote, this isn't just about speed, blah, blah, blah. We already read that part, so we're not going to read it again. They just wanted to give you that actual quote from Jennifer King, who is, of course, the chief marketing officer of Qubic Network. And keep that in mind and take this all with a grain of salt because it is coming from Qubic themselves. Just verified by a third party. Either way, still pretty bullish for Qubic in general and bullish for GPU mining and CPU mining as well. Hopefully, it will do something that can bring back GPU and CPU mining for us. I would say, mentioning the CMP 170HXs earlier, this particular project will not perform near as well on the CMP 170HX, which is, heavily leaning towards memory performance with its HBM2 memory, as opposed to getting something newer like a 4090 or a 5090 to mine this in particular. Now, if we take a look at the performance for Qubic here recently, let's go ahead and head on over there. I think over the past 7 days, it did have a pretty sweet pump up just due to this announcement, obviously. And we'll have to see how it's adopted. It's still down from its all-time high back in May of 2024, which it's pretty far down overall as far as that's concerned, about 68% down right now, but it has had a recent little pump up, which is good. Now, its tokenomics are quite insane. The dev team, there's some issues as far as like them changing the rules on things, which has been quite frustrating for a lot of people. But their total market cap is 176 million right now, with a 24-hour volume of 5.85 million and a fully diluted value of 303 million. Not quite as bad as something like Pi Network as far as the fully diluted value, but you still have potentially, if there's not a large adoption, you still have probably a 50% drop incoming without significant push in the market to adopt it as a layer one solution. Hopefully the speed of transactions is what really takes over. And that's kind of the thing with these types of projects. It's like, how much, centralization is going on? What are the dev fees? What's the potential for a rug pull? And then on top of that, will people really adopt it? And how many people are you going to make millionaires before they decide to realize that they're millionaires in fiat currency and dump it on the rest of the community? All these things are up in the air. That's why you mine it and you don't buy it, good sir. And you can mine this quite easily. Unfortunately, it has hit the charts. So the big thing about Qubic right now is the cat's out of the bag. If you've been mining it for a while, you're probably pretty good off. But if you haven't been and want to get into it now, difficulty will be rising, unfortunately. If we go on over to mining pool stats, let's go take a look at Qubic. Mining. Why is that? Oh, almost did it. I can do this. Somehow I typed in .com there. Qubic. I would presume we're seeing difficulty tick up. Yeah, massive difficulty tick up here back in January, and it's just been kind of solid, unfortunately. So obviously there's a big tick up in difficulty on this particular project, still maintaining profitability, and thank goodness a lot of the farms are going offline. So, maybe it won't be as impactful and home GPU mining will have a chance with something like Qubic. Like I said, it's really going to come down to adoption at the end of the day. Yes, and Vinny said, once again, I will say this again, just reiterate from chat. Vinny says tokenomics on Qubic is challenging, and that is true. And there were a lot of questionable activities going on between dev fees and stealing rewards, etc. There's a lot of that stuff is accusation though too. I have talked about it in the past. The speed is going to be important, and then now adoption, right? So the big question will be, does the crypto community adopt it for things like DeFi, NFTs, DPIN, all that sort of thing? If that doesn't happen, then it's a moot point and it falls on its face. If it does happen, then we go from this 303 million fully diluted value to, a steady 4 billion, which is probably sustainable on this. And then if we do that, then things look really good, right? So if we do market cap of, and we say, for example, I think Caspa is at 4, right? At 4 billion right now. And then we add in Qubic and we pop that off. Actually, we want to do this backwards, right? Qubic and Caspa. we pop that off, we would have a 14x from here with Qubic, which I think is a completely reasonable target. What was that, 2/1000 or 2/10,000 of a penny? At this point with a 14x pump up from where it's at. Keep in mind, the total liquidity is in the trillions, right? So I wouldn't expect to see this like hit even like a tenth of a penny or anything like that. I think this is a completely reasonable price target for this particular project at this point. And so, it is there. If we went to the Caspa all-time high, then we could see a 28x, and that would be possible if it took off like that, for that to hit there. So that's kind of my thoughts behind Qubic right now overall. Mining it is pretty low risk. Obviously, right now it is covering power at 10 cents a kilowatt hour. So it's like it's a no-brainer to throw some at it. The difficulty is already kind of capped at what it's going to be capped at. Like I said, I think a lot of mining farms for GPUs are turning off more than turning on right now. So if you want to look at it, go check out my How to Mine Qubic video. Obviously, I'm not sponsored by any coins ever, period, end of story. If something comes up where they have messed something up, let me know immediately, and I will address it on the show. And Squirrel Master says he's dual mining with it. Ozzy said, sup, Soat, how long are you streaming for today? I'm a little late. Well, we just started, so you're good to go. We'll be streaming for a couple hours here. We're basically 2 articles in, so no worries as far as that's concerned. And we will keep going. So, strategy Coinbase, miners among crypto stocks rallying as Bitcoin surges above 90K. Beaten down crypto miners snapped back after weeks of underperformance with Bitcoin catching momentum. Crypto-related stocks surged on Tuesday, riding the momentum of a broader crypto rally that has reignited risk appetite across digital assets, with Bitcoin crossing above $90,000 US. Shares of Strategy Master, the largest corporate Bitcoin holder, and crypto exchange Coinbase were up 8 to 9% during the session. Leading the move higher were Bitcoin miners, with many of them posting double-digit gains, outpacing Bitcoin's 5% advance. Bitdeer Technologies rallied some 20%, while Bitfarms, CleanSpark, Cypher Mining, Marathon Digital, and Riot Platforms soared between 10 to 15% during the session. Meanwhile, the broader stock market also rebounded from yesterday's decline, with the Nasdaq and S&P 500 up 2% and 1.7% respectively. The rally in the TradFi market came as reports of potential de-escalation of U.S.-China tariff tension lifted investor sentiment. The bounce in mining stocks come after months of underperformance weighed down by compressed margins, rising hash rate competition, and tariff-induced difficulties, all of which are combined with broader market weakness for risk assets. Most, if not all, publicly traded miners are still trading near multi-month lows. At issue for U.S.-based mining operations is the Trump administration's tariff policy, which threatens to make ASICs, the machines used to mine Bitcoin, much more expensive to import. That means that mining operations in the U.S. will probably grow at a much slower rate or even stop growing altogether. The tariffs, quote, will materially affect future spending and capex in the U.S., end quote. Co-founder and CEO of mining hardware provider Syntech Digital told CoinDesk recently. Quote, other jurisdictions that had previously looked higher cost will become sought after targets for new infrastructure and capex deployment. Canada, in particular, will likely be a benefactor to the implementation of the global tariff regime that's been put in place by the White House, end quote. Relatedly, one of the reasons behind Bitdeer's outperformance may be because the company is developing its own ASIC manufacturing business and recently took the decision to build out its self-mining capacities instead of selling its rigs in a slower market. Stablecoin giant Tether has also been on a buying spree of Bitdeer shares. As of last Thursday, the company had invested $32 million into Bitdeer. Even so, miner stocks have been on the downtrend since December, long before the White House unveiled its new tariff policy. Now, with Bitcoin climbing above key technical levels and liquidity flowing back into the space, miners are probably catching a bid as a leveraged proxy for Bitcoin's upside. Regardless of the outperformance today, tariffs will continue to play key roles in miners in most crypto-related stocks, along with other risk assets. With earnings season starting soon, all eyes will be on comments from CEOs about how the tariff situation will change the corporate outlook. Notably, Elon Musk's Tesla, which also holds Bitcoin in its treasury, will report its earnings post-market on Tuesday, potentially providing some insight into how traders should price in the trade war uncertainties. Now, we've already talked about how that might affect ASICs. There's still some stuff that's like up in the air as far as all that's concerned. We did talk about Ice River's parent company going public in the US and potentially, building miners stateside or manufacturing them stateside, or at the very least assembling them stateside, something along the lines of like what we talked about with Osprey Electronics, who assembles them stateside, which can help alleviate some of those tariff costs, namely in the fact that, if you're below that, I think it's like $600 or $800, something along those lines on those tariff fees coming in, or on the individual parts coming in, that can reduce or get around some of that tariff cost. So at the very least, we'll be seeing assembly there. There is also apparently talks of assembly, at the very least, maybe some manufacturing at some point along the line from Bitmain stateside. That's really, really rumored at this point. I've seen talk of it on Twitter. I haven't seen anything official. There are talks of like, so for those of you not know, there's assembly which can be done, which can bypass some of those tariffs like we talked about earlier, but also there are things you can do in the ports themselves that can get around key tariff costs, and so that may be what they're referring to as far as Bitmain in particular is concerned. Either way, it's still up in the air. I've always said HODL Silicon. I bought a lot of S19 Pros and S19s. They have not quite paid off yet at this point off of the Bitcoin halving cycle that I typically follow. And I am starting to adjust a little bit more conservatively on my predictions for the Bitcoin price, coming down from that 210 to maybe like 120 to 150. And if that's the case, it's going to be hard pressed to make a ton off of this cycle with S19 and S19 Pros. I think there still is some in there. It could actually be better for me personally from a business perspective if these tariffs put a lot of hold on new incoming miners to the States, because at the end of the day, like we talked about last week, it will come down to energy price. And if you can't get the miners, and somebody has a lot of miners, but you get the energy costs down stateside, then it will increase the demand on the older miners. So that's really what I'm interested in at the end of the day. Ozzy says he's been stacking T21s and power supply, swapping them clocked down to 15 joules per terahash. That's pretty good. And sub 2,000. A weekly rant says Bitmain has a monopoly so far on manufacturing. Is that, I don't know that that's 100% true, because you do have WhatsMiner, which is pretty competitive, I think, at this point, but I don't know if they buy their ASIC chips from Bitmain directly. If that's true, then it would be a monopoly, but I don't think that that's true. Let me know. I could be incorrect on that. So obviously Bitmain controls a ton of the mining market. ASICs are a problem in general for decentralization. It's an inconvenient truth for Bitcoin maxis that want to prop up the viability of Bitcoin over all else when there's a clear centralization issue in hardware manufacturing on the Bitcoin side. I am adamantly against ASICs across all cryptocurrencies, including Bitcoin. Bitcoin is in a unique position to where you can participate in it from a mining perspective more safely than other ASIC operations other than maybe Script, because Script has a ton of different cryptocurrencies that you can mine or mine them together to generate revenue. So it's a more versatile mining equipment. But other than that, if you're going to go out and buy ASICs for a single shitcoin cryptocurrency, say like Caspa, Alio, Radeon, just name any of the shovel selling pump and dumps that the KOLs are shoving down your throat. And I don't think any of that's a good idea, right? Because that's really what the industry has turned into over this previous cycle, which was, create a cryptocurrency, create an ASIC for that cryptocurrency, get with influencers now known as key opinion leaders, pay them to sell those miners, and then after you've sold your batch, dump the coin on everybody's head and completely cannibalize the entire mining industry from the ASICs perspective. And I do think a lot of developers are at fault for this. I think some didn't know. I think some were stupid. Like I think when we talked to the community manager for Radeon, I think that is an example of stupidity. I think some was done maliciously. If we take a look at some of the $8 million deals that Caspa had early on with some mining, that is brought into question for me. So it's up in the air. And let's see, it looks like I'm dropping some frames. So let me get that sorted. But I don't think that any of that was a very good thing for the industry as a whole. In fact, I think it damaged the industry quite significantly. Hold on, boys. Looks like we had some issues with some of the streaming, so I'm just going through some settings here, making sure maybe we're getting DDoSed. Who knows? Boom. Okay. Are we in the clear now, boys? Open widget. Poor. YouTube is not receiving enough data. It looks like it's receiving enough data. Let me close out some stuff here. We have a good internet connection here, but maybe we're just having some... Yeah, YouTube is saying it's not receiving enough video to maintain a smooth stream. As such, viewers will experience... But if I look at the... Anyways, if you're having trouble watching on YouTube and there are still issues, there is a backup stream over on Twitch. So you can head on over there if there are still issues going on YouTube, and hopefully it clears it up for you. These lights get hot, dude. All right, so that's my spiel on layer one proof of work cryptocurrencies and the whole shovel selling thing that's been going on surrounding it. I don't think it was healthy for the market. Unfortunately, I think it's damaged cryptocurrency or proof of work as a whole, because it really just kind of proved that proof of work is just as susceptible to these scam type activities. And it's hard to, or at least like the nature of like pumping up an asset to then sell it. The only difference is it's a pump and dump with extra steps, right? You build the currency, you build the thing to mine the currency, you pump up the currency to sell the equipment, and then you sell the currency after you sell the equipment, and then you're kind of just making a ton of money on all of it. And it's I don't think if you're if you're step 3 in that process or step 4 in that process, you're already at a disadvantage. So it's not a very good business decision, right? So unless of course you have things like access to really good energy cost, and then maybe it makes sense, right? So at the end of the day, it is what it is. It is what it is. Now, there is a big news on ETFs getting massive inflows, Bitcoin ETFs in particular, since January. Now, for those that are not aware, Bitcoin ETFs or an ETF is an exchange traded fund. And when they refer to Bitcoin, it is a Bitcoin valued or based exchange traded fund. The significance of this really at the end of the day is access for people to move into Bitcoin with their retirement funds like their 401ks. Outside of that, not something, I mean, like if you're going to directly invest, obviously just purchasing the Bitcoin directly is going to be your best bet. But let's say you have a bunch of retirement, you want to put that long run into Bitcoin, you don't want to pull that out and incur taxation, etc., and then put it into Bitcoin. It can be a viable option for you, and that is the significance for it. And I want to make that clear because I know there's a lot of negative sentiment from Bitcoin maximalists surrounding ETFs. It does go against, your traditional white paper hardcore believers. In Bitcoin, yes, it is paper Bitcoin. You do not control the Bitcoin. If you do not control the keys, you don't control the Bitcoin. All these sorts of things. You're trusting a third party custodian. But it does mean there's more money coming into Bitcoin as a whole. And it does give people a tax-free way to move their retirement into Bitcoin and get exposure, and it props up the Bitcoin price. So by and large, it is probably a positive because it's just another way to participate within Bitcoin. However, that value of that asset will still be denoted in fiat. So, it is what it is. That being said, US-based Bitcoin exchange traded funds had their largest day of net inflows since late January as crypto markets remained buoyant over Easter weekend. The 11 Bitcoin tracking funds saw a joint net inflow of $381.3 million on April 21st, largely carried by $116.1 million inflow into the ARK21 shares Bitcoin ETF, according to CoinGlass data. Now, a lot of people were asking, where was your April 20th prediction coming from? I was purely looking at tax day, avoiding taxes, when that would clear up, and the day we would see it in markets. I had a pretty good feeling that we would see it in markets specifically because of exchange traded funds. So this is something I was already expecting, and where my Bitcoin will begin to recover again on April 20th prediction came from. It really wasn't like a 420 joke. It was literally, that was the data based off of all that. We had that long weekend, and that's what I was expecting. So that is where this came from. And this was the data I was following. So I wanted to follow up on it so you guys understood what I was looking at. It's the largest inflow day for ETFs since funds had a $588.1 million joint net inflow on January 30th, days after Bitcoin hit a peak and was trading with a six-figure price tag. The ETFs have struggled to maintain inflows over the past few weeks amid U.S. President Donald Trump's trade war threats. CoinGecko shows Bitcoin fell below $100,000 US in early February and hit a 2025 low of $74,773 on April 7th. Unfortunately, I was under by about 2,000 or 2,700 on my prediction there, but Close enough. Days after Trump placed tariffs on every country, which also caused a stock market slump. The Fidelity Wise Origin Bitcoin Fund, FBTC, saw the second largest inflow for April 21 with $87.6 million, while the Greystone Bitcoin Trust, GBTC, and the company's Bitcoin Mini Trust ETF, BTC, saw joint net inflows of $69.1 million US dollars. BlackRock's iShares Bitcoin Trust ETF, the largest of the group by assets under management, saw net inflows reach $41.6 million, about half of the inflows it saw before the weekend trading break on April 17th. U.S. markets had shut down on April 18th in observance of Good Friday, and trading on Monday, April 21st, saw them close in red, with the S&P 500 down 2.4%, while the Nasdaq and Dow Jones each dropped 2.5%. The crypto markets, meanwhile, were able to hold on to gains made over the long weekend, with the total crypto market capitalization climbing by $800 billion over the three-day break to hold at $2.84 trillion. Bitcoin has boosted that total, having climbed above a market value of $1.75 trillion for the first time since March 22nd, as its price struck above 88,000 on its 4-week high. Now, I think Bitcoin's significantly above that now. Yeah, it's trading at 93,000 right now. We probably have a little ways to go to get back up to that 104,000 though. I guess not. It's really looking like it's going to peak back up to that. The question is, typically it's like what? The 12-month mark, which is now, would be the first euphoric raise, and then another correction, and then one more euphoric raise. The question is, how high is that going to go? We technically have 2 more left in this cycle, with 18 months being the final, so like 6 months from now. Which would be October. So it is getting to the point to where it's push or shove on whether the halving cycle is going to have as significant of an impact as it has had in the past. I'm up in the air. I don't really know. I know from a timeline perspective, I want to start getting out soon. If I'm following the halving cycle. So there's a lot of thinking and analysis and things to look at from a mining perspective on when you want to get rid of, some more equipment. I feel like from the GPU mining side, it's time to buy GPUs because all of the GPU mining farms are fully capitulating and selling. The big players are getting out. At the same time, if we were to look at like can we see it here? This is just volume. The emissions of, say, what's the highest GPU mineable emissions? This isn't even real. Let's go here. Raven coin at 43,000 a day. What else do we got on here? Flux at 14,000. There's just not enough daily emissions to really justify large GPU mining farms at scale, right? Zealous is looking good at 13.37 thousand. And Varus coin at 11.78. That's pretty good for it's going to be more cell phone mineable. Chlor's impressive at 11,000. Is Qubic the highest emissions? Qubic's not even on this list here. Unfortunately. That's weird. Because it is listed. But they don't have their emissions here listed because I guess this just isn't working that well. But in chat, for those that are not aware, Ozzy said Qubic is the highest right now at $140,000 of 24-hour emissions, which is pretty good. overall, if that's true. I can't verify it on mining pool stats, so let me know how I can verify that, Ozzy. But we'll move on from there. A little bit of GPU mining news, just for those that aren't aware. We have AIDP, a halving for it coming on April 23rd, which isn't that yesterday? Yeah, the halving happened yesterday. 45% of the 45.53 supply / incoming. The new block reward is now 200 AIDP, and it is going to come down, or it came down for 367.2 AIDP. And it happened on, what block was this on? I don't know. It doesn't say it's 50, 518,000, blah, 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 something like that. Anyways, I'm not a big fan of AIDP. I think putting in, AI and DPIN into your name is more just trying to capitalize on, key opinion leaders, influencers, and hashtags more than anything else. But the project has remained, actually functioning. So there's positive there. If we take a look at, let's go take a look at their market over here. The price is down 14%, which is pretty rough. The difficulty is taking a pretty heavy slash. I would assume the emissions are pretty rough too. And our plant owns 92% of the known hash rate. So that's pretty rough. Whew. So they're at risk for 51% attack. Their price is down. Their daily emissions are abysmal. I don't know. Well, you expect the difficulty to go down from the halving, but you don't expect the price to go down from the halving, right? It is what it is. All right, so there's a new GPU mineable coin that has launched here recently. I decided we'd take a look at it, do a WTF is. So WTF is Gemma, Gemma. It's on the Kapow algorithm, also known as ProgPow, or Progressive Proof of Work, to prevent ASICs from mining on the network. It has 17 functioning pools with 19 proposed pools, 2 with API errors. Unfortunately, our plant once again is taking over a majority of the hash rate at 57.5%, so it is at risk of a 51% attack as we currently speak, with Zerg Pool coming up in second with 30% of the hash rate. Its current price is definitely sub penny, but is up 120%. I believe the markets it trades on is Exbitron and Rabbit-Rabbit.org, which we talked about with Retro Mike in the past, and he said that it does work. Unfortunately, the 24-hour volume on Exbitron is only $62, so not too fantastic as far as that goes. But let's go ahead and take a look at the website. It's a brand new project, so I would expect that to kind of be the case. There is a faucet right here available immediately. They do have a Twitter, Discord, Reddit, Telegram, and GitHub. It does look like they list a third exchange that I haven't heard of called NestX. And so there is another exchange available for this particular project. Let me go ahead and give them a follow over here. And what is it? Gemma is a native cryptocurrency optimized for social tipping, micropayments, and asset issuance. It was designed with a large supply, fast transactions, and low fees, with an asset layer that allows you to create and store custom tokens and NFTs on the blockchain. So the same as every other project, essentially. Transactions are secured by proof-of-work mining consensus, and they utilize the Kapow algorithm for ASIC resistance, ensuring that anyone with access to a GPU can mine competitively. Cool. So the ticker is Gemma. It has a 840 billion max supply with 60-second block times, which is pretty slow these days in general. Low fees, proof of work, Kapow. The block reward currently is 190,000 with a halving every 4 years. It sounds like a hard halving. You can see the Gemma Core wallet here is just the Ravencoin wallet. So pretty much a straight fork. And here's a big negative right off the bat. At least it is on the front page, so you don't have to dig for it. There was a 5% pre-mine, and that was 42 billion of the Gemma token to a public address that was used for community rewards, exchange listings, and liquidity. It says that that is to fast track Gemma's growth. Unfortunately, you know, pre-mines are a pretty big no-no these days, especially for a fork that's pretty low effort, in my humble opinion. It does look like that 42 million went in on April 5th, and they moved it to another wallet on April 11th. Let's go ahead and see what wallet they moved it to. So they moved it to this wallet, it looks like. But there's about 41 million still there, almost 42 million. So it hasn't really been moved or utilized right now on their block explorer. That's what we can see as far as that is concerned. And it does look like there's a faucet. So if you want to put in your Gemma address, you can get 10 Gemma every hour. Mining it should be pretty straightforward with any Kapow-enabled GPU mining software. I would presume it's pretty easy as far as that's concerned. I do want to look at liquidity on Rabbit if we can. Oh, you got to log in on this one, right? This isn't even in order, is it? I'm not going to find it. Okay, we're going to give up on that. I do not like this exchange. At least let me just browse the markets without logging in. You know what I mean? Oh, can I? Hold on. Maybe I can. Oh, yay. Okay. So, where's the search button? There's like 1, 2, 3, 4, 5 buy orders and a bunch of sell orders. So not looking too hot right now as far as that's concerned. There is a Bitcoin talk. I think this covered pretty much everything else that we've covered on it. Overall, pretty underwhelming. Seems like a Ravencoin fork with a 5% pre-mine and nothing too special as far as all of that is concerned. But just like with any other project, it's going to depend on adoption. It's going to depend on longevity. It's going to depend on continued development. So we'll keep it on our radar. If you want to pre-mine or sort of spec mine, even though there is a price there, feel free to do so. And if there's any big news that comes out about it, we'll cover it in the future. But there is your WTF is Gemma token, with pre-mine being the worst part, I guess. Okie doke. Let's talk about GPUs. We have the Radeon RX 9060 XT with high GPU clocks. Recent days have been and will continue to be filled with GeForce RTX 5060 Ti news, NVIDIA's newest graphics card for the mid-range segment. But as we have repeatedly mentioned, AMD is not going to let NVIDIA take the whole spotlight, as they are preparing a very similar GPU to launch soon. Just like the RTX 5060 Ti, the Radeon 9060 XT will feature two memory configurations of 8 gigabytes and 16 gigabytes. The difference compared to the GeForce is that AMD is sticking to the GDDR6 technology, which we've talked about before is extremely disappointing from the mining perspective, making AMD currently irrelevant in the mining space for the most part. Based on that most recent information, though, we have from AMD, the 9060 XT will launch with 2048 stream processors, and that will be half of the core count of the Navi 48. We also have an update on the clocks, and it looks very interesting. First, a reminder that the 7600 XT, the predecessor to the 9060 XT, featuring the Navi 33 XT GPU, had a game clock of 2470 megahertz and a boost of 2755 megahertz. The RDNA 4 update will have much higher clocks. According to our information, the 9060 XT will ship with a 2620 megahertz game clock and breaking 3 gigahertz at 3230 megahertz boost clock. But that's not all. We also learned that some of the overclock variants will go up to 3.3 gigahertz boost. It will require at least a 500 watt power supply, and it will use a 16-pin power connector. It says waiting to see about the 16-pin. Currently, they saw some 8-pin variants, hopefully, right? So what is the TDP today? TGP is not announced yet. I would assume going to be down to like 180 watts or something along those lines. But from the mining perspective, the core intensive algorithms could be interesting, but you know, with GPU mining right now, I guess Qubic sure can benefit from the core. So maybe, but other than that, pretty meh overall. And Qubic is just not working that well on AMD as it is. So just whatever. I don't know what to tell you. That's not the only Radeon GPU. Apparently, there will be an RX 6500 ultra low-end GPU option coming. I really like this half-height GPU, though. It's pretty cool. This is going to feature 1024 stream processors, same as the 6500 XT. And it should be close to the 6400 since it offers 4 gigabytes on a 64-bit bus of GDDR6 memory. Boost clock of 2 gigahertz and 4 gigs of memory. Not going to be a mining powerhouse or anything, but maybe for some small form factor living room PC gaming, maybe it's worth it. These days, I mean, I've got to be honest, dude. I have 2 mini ITX computers right here. They fit 360 millimeter radiators in them and full, like you can even see the GPU down here. That's a 4080 Super right there. Massive one, the big one from Zotac, has the 3-bin, and the thing's still, what can I use for, we'll just do this. So, there's a two Rockstar cans tall and maybe 1 wide. It'll fit in the living room. I just don't know, like, you can get even smaller ones. I have an even smaller one over now that had to use a 280 millimeter radiator in the height, but that still fit like a 7900 XTX in it. Really small. It's under the TV in the bedroom. That's the gaming rig I use in there. So do you really need something this small? I don't know. Welcome to String Frog, man. I don't know what the use cases are for this tiny at this point anymore. And if you are going to go that tiny, like, I don't know, Steam Deck and just dock it. Oh, well, no. And this is a 6000 series, right? So this won't support FSR4 because the biggest benefit of the 90 series is FSR4. Anyways, let's go ahead and talk about China's Huawei launching AI chips to fill the NVIDIA void. China's Huawei Technologies has stepped up to fill the void in AI chips. now that the US has effectively barred NVIDIA from selling AI chips to Chinese customers. NVIDIA's stock fell Monday. Huawei plans to begin mass shipments next month of alternative to NVIDIA's now banned H2O processor. Reuters reported Monday Huawei has already made some shipments of the new artificial intelligence chip called the 910C, Reuters said. The 910C achieves performance comparable to NVIDIA's H100 chip by combining two N10B processors into a single package through advanced integration techniques, the report said. The H100 chip is an older NVIDIA processor released in October of 2022. Earlier this month, the Trump administration told NVIDIA it would need to export an export license to sell its custom H2O processor in China and other restricted countries. NVIDIA is taking a write-off of up to $5.5 billion for inventory in its fiscal first quarter, indicating that it does not expect to be granted any licenses. NVIDIA rival AMD received a similar trade ban for its MI308 products from the Trump administration. AMD expects to take charge of up to $800 million to write off inventory and purchase commitments related to AI chip sales to China. NVIDIA, so on the stock market today, NVIDIA stock dropped 4.5% to close at 96.91. AMD stock retreated 2.2% to close at 85.56. Huawei plans to release its next generation AI chip called the Ascend 920 later this year. The Ascend 920 supposedly offers performance comparable to the NVIDIA H2O, Tom Hardware's reported. China's SMIC is reportedly manufacturing the chips for Huawei. One question is whether SMIC has the production capabilities in place to support China's burgeoning AI demand, given the increase in advanced semiconductor processing requirements. SMIC purportedly remains challenged to match desirable yields, he said, but if SMIC can surmount these issues and U.S. restrictions remain in place, eventually new offerings from Huawei could permanently constrict NVIDIA's opportunity in China. Year to date, NVIDIA stock is down nearly 28% on concerns about trade restrictions and ongoing demand for AI processors for data centers. Huawei is a big player for chip manufacturing, and coming into place here could shake things up a lot. I'm not so sure that restricting NVIDIA from selling chips to China is the best idea. And I'd like to hear y'all's thoughts on it. From a competitive perspective, wouldn't you want a US-based company to be basically in charge of making all of those chips, even if you're selling some of them to a competitor? Now I get it, AI is supposedly supposed to be extremely powerful. There are military consequences for this in particular, but economically, it could damage the United States more than it helps it to stop NVIDIA from selling them to China. And then if Huawei uses this opportunity to catch up to NVIDIA on the AI side of things, then things look worse and worse for NVIDIA at the end of the day. Now, there's going to be, obviously, from a, conservative capitalist perspective, I suppose you want restrictions on those things to prevent, or you want to put guardrails on it. From the independent side, I'm sure you want, the independent side, you would say full unbridled capitalism. Maybe that's not the answer either. There has been this kind of weird middle ground where NVIDIA sells the D chips to China, like the 5090D, the 4090D, etc. I don't know how impactful or how big of a difference it will end up being, or preventing a 4090 being sold over a 4090D at the end of the day. I mean, we saw DeepSeek with R1 come out, and I'm by no means an expert in AI, but my understanding is that was all done on AMD chips and pretty low-end hardware in general. And as we've seen, we've seen this on the gaming side of things where you need less and less powerful hardware as technology progresses. So by restricting the powerful hardware, you're almost helping the competitor advance because they're having to work within lower constraints, meaning that they are moving towards the goal of utilizing less and less power to achieve the same results, thereby advancing further technologically than you are because you have access to more power, right? It's the same thing happened in the auto industry, right? Slowly and slowly, you know, 4-cylinder turbos got faster and faster and faster and faster to the point to where even trucks are being sold with like V6 turbos as opposed to being sold with V8s in them. And the power is comparable to that of an old V8, if not more in a lot of cases. I assume the same thing happens with chips at the end of the day because the software being designed around utilizing less powerful equipment would be more advantageous than if you just let them have the more powerful equipment. I don't know. That's just me as a critical thinker going through the process in my head of like, does this make sense to restrict it or does it not? Economically, to me, it makes no fucking sense and is only hurting us economically, right? That's how I feel about it, but I'd like to hear what you guys think too, of course, in the comments in the live chat. So SRBMiner released a new miner. It's been a while. I guess SRBMiner is the only one releasing new updates at the end of the day. This came out 2 days ago, and they added a new algorithm called CLC hash for CLC crypto, and it is CPU mining with a 2% fee. They also did some performance improvements on curve hash for CPUs and some minor bug fixes. For the GPU guys here, nothing to see. Move on. But if you are interested in maybe catching a new algorithm and a new cryptocurrency early, well, CLC hash could be it. And maybe we'll do a WTF is on CLC crypto next week. So if you're interested in that, let me know and we will get that covered. We already covered this topic in particular, and we have already covered, well, let's talk about this one because this one is important. That's right. Okay. So Bitdeer secures $60 million to boost Bitcoin ASIC production amid record hash rate. And it is for self-mining. Now remember, they were talking about why Bitdeer is going up in stock prices compared to other miners, and it is because they are working towards developing their own and manufacturing their own chip and actually running them themselves too. So they'll build them, they'll mine on them, they'll, pay for the power cost, all that sort of stuff. And that is, obviously extremely bullish in the stock market. Bitcoin mining firm Bitdeer secured $60 million in loans to ramp up its Bitcoin ASIC manufacturing efforts as global mining competition intensifies amid record-breaking network hash rates. According to its annual report, Bitdeer entered a loan agreement in April with affiliate firm Matrix Port, a crypto financial services company founded by Bitdeer's chairman, Yuan Wu. I think I said that right. The facility offers up to $200 million backed by Bitdeer's SealMiner hardware with a floating interest rate of 9% plus market benchmarks. As of April 21st, Bitdeer had drawn $43 million from the credit line. The latest funding adds to a $17 million unsecured loan obtained in January alongside previous capital raises totaling $572.5 million via convertible notes in 2024. Bitdeer also issued over 6 million shares, raising nearly $119 million in equity markets this year. In February of 2025, Bitdeer acquired a fully licensed 101 megawatt gas-fired power project near Fox Creek, Alberta for $21.7 million in cash per the annual filing. The site, with potential to scale up to 1 gigawatt, includes all necessary permits for construction and a 99 megawatt grid connection. The power plant is set to be developed with an EPC partner and is expected to be operational by the fourth quarter of 2026. In March, the company also purchased 40 megawatts worth of liquid-cooled mining containers from Heat. More recently, it was reported that Bitdeer is expanding its self-mining operations and investing in United States-based production. The shift came in response to cooling demand for its mining hardware from other miners. Quote, "Our plan going forward is to prioritize our own self-mining," said Bitdeer's head of capital markets and strategic initiatives. Additionally, on February 28, 2025, Bitdeer launched a $20 million share repurchase program effective through February of 2026. To date, it has repurchased 1,056,500 Class A shares valued at about $12 million under this program. A higher hash rate indicates that more miners or more powerful machines are competing to solve Bitcoin blocks. As competition rises, each individual miner's chance of earning block rewards decreases, implying declining profitability. Further hurting miner revenue are low transaction fees. As of now, the average Bitcoin transaction fee hovers around $1, down from over $16 per transfer in April last year, according to YCharts. The low transaction fees and rising hash rates forced public miners to sell over 40% of their Bitcoin production in March, the highest since late 2024. Firms like Hive, Bitfarms, and Ionic Digital reportedly sold more than 100% of their monthly output. Ooh. But I mean cash flow. Right now, if you can cash flow and survive, things are pretty good. I think we have quite a few more articles to really get through today. I don't like that one. I don't like anything about Ethereum. Should we talk about Ethereum? I don't know. Let's talk about the big elephant in the room, the Solana ETFs. This article was written yesterday, and Canada's Crypto Innovation Explained. So, what are spot Solana ETFs and why are they important? As you guys know, we talked about Bitcoin ETFs, exchange tradable funds, and in particular, how that adds exposure for 401k retirement funds in a lot of cases that, other people might not have gotten exposure to Bitcoin, how that is, against the Bitcoin white paper in theory, but makes sense as far as propping up the price. Solana is a little bit different, already centralized, doesn't really have the tenets of Bitcoin in general, but is going to be looking at maybe getting a spot ETF. And it will hold tokens directly, providing investors real-time exposure to the asset's market price. Rather than using complex trading platforms or crypto wallets, you can access Solana via a regulated financial product traded on a traditional stock exchange. The value of Solana ETFs is directly tied to the open market price of SOL, offering a simple way to gain exposure to the blockchain's performance without directly holding the asset. Unlike futures-based ETFs that use derivative contracts to speculate on Solana's future prices, a spot ETF tracks the performance of the actual asset. This distinction is significant because futures products may face pricing inefficiencies, leading to performance mismatches over time. Spot ETFs are more transparent and directly reflect SOL's real-time supply and demand on the Solana blockchain. Spot Solana ETFs mark a significant step forward toward mainstream crypto adoption. These products enable retail and institutional investors to gain exposure to the Solana ecosystem while operating within the bounds of securities regulations. Like spot Bitcoin and Ethereum ETFs, spot Solana exchange traded funds are expected to expand market access and serve as another entry point to decentralized finance for traditional investors. On April 16, 2025, 4 spot Solana ETFs started trading on the Toronto Stock Exchange following approval from Ontario Securities Commission, the OSC. With this, Canada became the first country to launch spot SOL ETFs with staking. The OSC granted approval to the spot Solana ETFs of 4 asset managers, 3iQ, Purpose, Evolve, and CI Financial. Unlike products that only track Solana's price, these funds hold Solana tokens, giving investors direct ownership of the asset. The funds are secured via institutional-grade cold storage custody. Each fund tracks a distinct Solana-related index, offering diverse strategies with on-chain asset backing. Despite their structural differences, these ETFs are all designed for long-term investment, reflecting the issuer's strong belief in Solana's future in DeFi. By incorporating staking, these spot Solana ETFs provide an active way for investors to earn returns in the cryptocurrency market, all within a regulatory framework and secure institutional-grade custody services. Now, that's pretty crazy because that would be the equivalent of essentially having an ETF in a Bitcoin mining farm at the end of the day where you get those returns. That seems beneficial. These ETFs enable staking through partnership with TD Bank, allowing the SOL they hold to actively support and secure the Solana network. In return, the network issues staking rewards, which can be passed on to investors. Since Solana typically offers higher staking yields than Ethereum, this structure may translate into greater potential returns for investors. By offering staking, these spot Solana ETFs may boost returns for investors by an estimated 2 to 3.5% annually, in addition to the performance of the underlying SOL. The ETFs generate yields by working with staking partners that delegate up to 50% of the fund's assets for staking. Staking rewards generated by the ETF are typically shared between shareholders and the fund manager, with the specific allocation varying depending on the ETF issuer. Management fees on the spot Solana ETFs vary from 0.15 to 1%, with the same providers offering fee waivers during the initial launch phase. After 2 days of trading, the combined assets under management for the 4 ETFs total about $73.5 million. Staking Solana may yield higher returns than staking Ethereum. The ETFs intend to pass these additional rewards on to investors, potentially reducing the long-term cost of owning the ETF. So there is a comparison chart here between the Solana ETFs, the different ones available, what their management fees are, and the issue dates. I think this is all in relation to, of course, Canada. We don't have access, I don't think, in the US currently, do we? No. So it's going to be passive income through proof of stake networks. And Solana is obviously a massive player within cryptocurrency. I don't know. Is this better than a Bitcoin ETF? If you had, access to this where you get recurring revenue on top of the performance of Solana in general, and you're already outside of the Bitcoin maximalist standard of paper trading and not transacting with banks or intermediaries, and you're throwing your 401k retirement at this, would you rather put your retirement into a Bitcoin ETF or a Solana ETF that has the potential to generate additional revenue? I don't know. This is a pretty interesting financial product at the end of the day. So it goes on to say that despite a subdued global economic climate, partly shaped by trade tensions during Donald Trump's presidency, Canada's regulators have taken a proactive stance, embracing innovation in the digital asset space. This is a complete 180 from where we were at just 2 years ago or even a year ago. The green lighting of Solana ETFs with staking reflects maturing approach to crypto policy and signals confidence in alternative layer 1 networks. Meanwhile, in the United States, anticipation is building. The launch of Solana futures on the Chicago Mercantile Exchange on March 17th of 2025 is seen as a stepping stone towards a U.S. spot ETF. The SEC is currently reviewing 72 crypto-related ETF applications as of April 21st, covering a spectrum of assets from major altcoins like XRP to meme coins like Dogecoin, including proposals for leveraged and derivative products. As of April 21st, 2025, the SEC is reviewing 72 crypto-related ETF applications, including derivatives. The filings range from major cap altcoins to meme coins and include leveraged products and options. The outcome of Canada's pioneering approach may offer valuable insight to regulators and could potentially influence the SEC's decision regarding these filings. However, the SEC's stance may differ significantly from Canada's due to structural and regulatory complexities within the U.S. financial system. Unlike Canada's more unified regulatory framework, the U.S. divides oversight between multiple agencies, including the SEC, CFTC, and state regulators, creating friction in crypto policymaking. I mean, the SEC would take on securities like Solana. CFTC will take on, commodities like Bitcoin and proof of work, and it's pretty straightforward. I think at the end of the day, Canada's trailblazing move could nonetheless offer a valuable case study for U.S. regulators. Thanks for the sub, Blood Curve. As markets await the SEC's decision, the key question remains whether Washington will follow Ottawa's lead or chart its own course and a slower timeline for non-Bitcoin spot ETFs. What's up, Crypto Mikkel? Welcome to the stream. Good to see you here. Make sure you guys go sub to Crypto Mikkel. Wrapping it up today, I wanted to do a reaction. Let's see how long this video is. 12 minutes. If you guys aren't familiar, Level 1 Techs is a typical tech YouTube channel, but what he's talking about today, which is really interesting to me, is KVM. Matt from Viperpool brought this to my attention. I figured I could watch it with you guys. You guys can get my opinion. Background on me, I'm a systems engineer, so I work in virtualization. So this stuff interests me as a whole, and maybe I can provide some additional insight. If not, we'll learn.
I'm very excited to report some new interesting progress on the Looking Glass project. What's the Looking Glass project? I'm doing almost 200 FPS in Shadow of the Tomb Raider at almost 200 FPS, well 120 FPS in our updates on a virtual machine that only has 8 cores. This is a Windows virtual machine that is running underneath Arch Linux. This is a fresh install of Arch Linux. I'll show you how I did it. You can basically run any game that you want under Windows. You can even run games under Windows that complain about virtualization, games like Fortnite. It is possible to evade Fortnite's virtualization.
Okay. So a little bit of what I've been doing lately is I've been utilizing SteamOS through a distribution called Bazite.gg, which is a Fedora-based Linux distribution that will essentially allow me to utilize any PC hardware like a console, right? I have like a remote that I turn my PC on with. I can do it from bed. And then I turn on my controller and I play basically SteamOS on my TV. Proton, for those of you not aware, essentially Windows uses DirectX, and then you have OpenGL and you have Vulkan, which is the latest version of OpenGL, which are the lower level APIs that allow you to play games on Linux, versus DirectX, which requires Microsoft. Now, what's interesting about this in particular is right now, Proton's taking care of a majority of compatibility between DirectX and Vulkan, right? Proton comes in, it translates everything over from DirectX into Vulkan, and then it plays. Performance has been fantastic. There's a problem, though. There are some games that essentially have anti-cheat that are making it incapable of running through Proton or on Linux hardware. 2 games of note, and one is Fortnite, which I play a lot of with my kiddos, and then the other one would be like Valorant, and that is because the anti-cheat goes all the way down to like ring 0 on the CPU. It requires Windows to be installed, and before now, it was impossible to run through virtualization. So you would essentially have to boot or dual boot, which means booting 2 different operating systems on the same PC, which obviously takes up more storage. It's more inconvenient. You have to reboot your computer every time you want to play Fortnite, etc. This apparently might be or end up being a solution to that, to where on this gaming PC over here, I no longer have to dual boot. Oh, and it's this one right here. I'll no longer have to dual boot this, but I can just run Linux full time, have a virtualization through Looking Glass that will allow me to play Fortnite with the kiddos, but then still not have to really run Windows ever again, because the ultimate goal for any nerd is to never use Windows, right? That's my goal.
Detection, but that is a huge pain in the butt, and I don't want to tell you exactly how to do that because then Epic Games will make it harder to detect when you're running in virtualization. There's a game being played right now. Some companies don't want you to play a game in a virtual machine because you'll cheat, but really that's just a lack of skill in terms of the programmer securing it as it's running in a virtual machine, because you can cheat when it's not running.
Do you hear them calling them out? They don't like it because they might cheat, but it's really just a lack of skill of the developers. Damn, Wendell. Fucking cooked them, dude.
In a virtual machine, because guess what? Windows
Those dumb developers.
runs in hypervisor mode anyway. Looking Glass. Looking Glass is a fantastic piece of software that brings sort of the promised land of being able to run a Windows virtual machine under Linux with full GPU acceleration. You can pass through a GPU. But there's an incredible update coming for Looking Glass that is to the indirect display driver, the IDD. If you're not familiar with pass-through and VFIO and that whole thing that I've been doing for like 10 years, basically you have a GPU for your host system. It can be an iGPU or whatever. Then you have a second GPU, and you pass that through to a virtual machine. And then Windows can run with the real piece of hardware. You can also do that with storage. So you can have a Windows virtual machine that has real storage, real NVMe, and a real display.
So you mean like you could pass through an NVMe? That would be pretty cool, I guess, huh?
And that's what we've done here on our Threadripper machine.
God damn.
This machine is built around the Fractal North case. It's got a nice wood grain. We did a video on that. And this is our ASRock TRX50 motherboard. Yeah, I'm just using TRX50.
Look at those coolers on the what do you call those? VRM? No, those aren't VRMs. I don't know why I'm. Anyways,
32 core Threadripper CPU.
Chipset.
I've also got a 25 gig Mellanox network card.
Exactly.
NVIDIA bought Mellanox, but Mellanox Connect X5.
That motherboard's sick though.
25 gigabit. There's a lot of PCIe lanes here. This setup works fantastically well for all things Linux and Threadripper and everything else. And this Windows virtual machine is running exceedingly well as a virtual machine on our Threadripper platform. I even am running virtual storage. I don't even have a second NVMe set up for our Windows system. Our virtual machine with 8 cores passing through a 9070 non-XT, 179 FPS. You lose a little bit of overhead because it is running as a virtual machine, but keep in mind this is a 32 core Threadripper. It's not quite as fast per core as in 4 cores. It's still a phenomenal result if you just want to play some games. Boom, look at that. I close Looking Glass and I'm back to an Arch desktop. I launch Looking Glass and there we go. Now notice our Looking Glass window is smaller now, but it actually resized the Windows desktop. Yep, that's a feature of Looking Glass. When you resize Looking Glass, the Looking Glass client on Linux, if it's running on the Windows VM, it will resize to be whatever the number of available pixels that you have are. And yes, you can go full screen, so I can do that. And then this is running natively. We can see that we're getting our native resolution, but if you don't want to run full screen, that's okay. I can hit scroll like F and it'll totally do that. Now, this indirect display driver is actually something very, very special because being able to play games and run this kind of stuff and that sort of thing, it's old hat for VFIO. If you're just learning about VFIO, this is a tremendous rabbit hole that you're about to go down. But the indirect display driver also has a trick up its sleeve, and that is it unlocks the ability to use more than one core for graphics acceleration. So if you don't pass through a GPU and you just want to be able to run a CPU-based GPU, you can do that. And it is dramatically faster than Spice and the VNC options that you have. So if you use a Virt Manager to create a virtual machine and you install the Looking Glass indirect display device, even though you don't have a GPU mapped, a second GPU mapped, if you throw a bunch of cores at that virtual machine, it will be able to run software emulation across many cores and you will get pretty significant acceleration. I did a video a couple of months ago on the difference between GPU accelerated Bing maps and non-GPU accelerated Bing maps with the Intel Flex GPU, and you can see how terrible and janky it is when you you don't have a GPU driver. With the indirect display driver, you can get this kind of draggable performance. Now, to be sure, it's using a lot of your CPU horsepower, whereas with the default VGA, like no hardware acceleration driver, it's just going to use one core. You're relegated to one core, which is why it is a stuttery, terrible mess. And it doesn't seem to be very well optimized. This driver is a little bit more optimized, and you're not getting something for nothing, but this is a much more usable experience. This is a dramatically more usable experience. So for home lab, for Proxmox, for anything, even if you're not physically passing through a piece of hardware, you should check out that Looking Glass indirect display device driver, which is coming soon. It's not quite out yet. Check on the forum or the Looking Glass IO website and see how that goes. The other part of this setup that I really have to comment on is that this was a dream. This was super easy to set up. I was shocked how easy it was to set up with Arch. Linux firmware-git is something that you're going to have to get with Yay or Peru or whatever. There are also community members that have packaged Looking Glass for Arch. Those are not officially supported because Looking Glass is not quite to a 1.0 yet, but they're basically bleeding edge. And so you can install the Git version of Looking Glass. You can get the Git version of the indirect display device driver. You can get all the stuff that you need to be able to run this on the very latest kernel. I'm running this on a 9070. I can run the 9070 on the host. I can run the 9070 as a virtual
I still
machine.
want a 9070.
The reset bug does still
I don't have one yet. I want it for my bedroom PC.
exist. For those of you that are new to the VFIO game, Code 43 and the reset bug, they're not necessarily the same thing. Sometimes you can't get the GPU to initialize whatsoever. Things are a little different as far as reset goes on the 9070. There is hope on the horizon for being able to reset, but what that means is that once the GPU gets into a certain state, you literally have to turn your machine off and back on in order to be able to use the GPU in a virtual machine. If everything shuts down correctly, and if the sun and the moon are aligned, and if you've got the right combination.
It sounds like it's probably going to be more pain than it's worth still.
Hardware,
until you get like a 1.0.
It will be a little bit more reliable than other combinations of hardware. It's really, I wish it were a better situation in terms of GPU reset and VFIO. It's a little bit of a bleeding edge that you get into the whole IOMMU thing and resize bar, and you have to take extra steps in order to configure your virtualization manager. There's lots of threads about all of that on the forum, but don't lose sight of the innovation and the breakthroughs here, because the breakthrough is that Looking Glass is very, very near to a 1.0 release, in my opinion, with the stability and the features that it has. And not to mention that even if you're not going to use hardware pass-through, the indirect display driver is a thing that will make your life better in
cool.
other scenarios. Enterprise virtual desktop users might not be too enthused about an indirect display driver that unlocks better performance because...
Yeah, I mean, like, obviously for enterprise, we're just going to stick with VDI and VMware, right? Like, at the end of the day, you're not going to do stuff like this.
It means that their machines will have to have more CPU cores, and more CPU cores doing video acceleration.
But I mean, if you were running like, okay, so if you were running like VDI with only CPUs, and you wanted to improve the performance cheap as a sysadmin, maybe in like a smaller corporate setting, I mean, you might get a pretty good kudo from the office. I don't know.
Is still,
I mean, most of the time, like if you're like at enterprise, like all those VDI hosts are going to have, you know, NVIDIA drivers and like the NVIDIA GPUs and all the hosts, and then it split. You know, you virtualize and you split the amount of video memory per virtual machine, and then boom, done,
still not
right?
as good as hardware doing video acceleration and decompression and things like that. That's really what makes the
But then again, you'd also have to have the CPU power to even do that. So
virtual desktop experience where you remote into a virtual machine, either from the same machine or from another machine on the network. That's what makes the experience not great. That's when you notice that, yeah, it's not performing well, or there's a delay, or it feels like that you're underwater. Looking Glass on the same host here, with or without GPU acceleration, even running 3440 by 1440 without a second GPU is an incredibly awesome experience. It's quite good. I was shocked at how good the experience was. I was shocked at how easy this was to set up on Arch. The Arch today in 2025 is an easier setup for VFIO and pass-through than Ubuntu 24.04, than Debian, than Proxmox even, than a whole bunch of other options. One other thing that I'll point out, there's a really great script that the community helped put together and is fairly well battle hardened in terms of being able to bind and unbind your GPU. So if you have multiple virtual machines that want to bind to a specific piece of hardware, you could do that.
What
so
about, I guess, what about like G-Sync?
A banking virtual machine that
right?
has GPU acceleration. You have a gaming virtual machine that has GPU acceleration.
I guess it would.
You have a second gaming virtual machine that has GPU acceleration.
No,
they can't all run at the same time, but they can all bind to the GPU, like if you're using Proxmox on your host or something like that. There's a script that works really well for this scenario. And as long as the virtual machine doesn't crash or do anything weird, then you can use that and bind and unbind.
But I mean, like if you just are going to use it like in my use case, right, where I'm just going to use it to play Fortnite, I would just cap the frame rate, do like a locked 144 or whatever, and just
some people use it for
not
binding
worry
to their
about
host and unbinding. So like if I wanted to use,
as long as you're like capped and you lock that frame rate and achievable rate, which is like 120 to 144 in Fortnite, it's pretty easily attainable, and lock it there, you won't have to worry about the screen tear.
use the 9070 on my host, but then shut down, log out of X, go to a textual command prompt and unbind AMD GPU and then pass that through to a virtual machine. That would be an option. You can do that, assuming that the GPU hasn't crashed and is not in a weird undefined state. Oh, one other note, it might be discouraging when you first set it up, that first boot on Arch. When you
I love Wendell, man. I love Wendell's, like, he sounds like every time he makes a video, I feel like he always has like the disclaimers like a drug commercial.
install the AMD Adrenalin drivers, it's very likely you're going to get code 43. That's okay. Go through the setup, make sure you get all the steps, make sure that you get your XML configuration as it is supposed to be, but shut your machine down and turn it back on, because the initial driver installer from AMD seems to put the card into a state where it will code 43, at least on my particular setup. All I had to do was just turn the machine off and back on, and then that was enough to clear the GPU, and we're off to the races. This specific configuration is using a Sapphire 7600 for the host GPU and the 9070 from Asus for the pass-through GPU. So I'm getting great pass-through performance and great host performance. Both of those are using Linux firmware. You should also know that for the newest kernel in Arch, you really do need Linux firmware Git, not Linux firmware. There's a bug that went away when I updated the firmware, where like you get one pixel column lines and some other unattractive stuff with the Linux firmware that comes from Pacman, or that comes from Arch's repository, which that's cleared up on the newest firmware from Linux firmware Git. Oh, and before I forget, Looking Glass donations. If you got a few extra bucks, this is an incredible progress.
Cool.
Definitely send Jeff some pennies from heaven, because this is a labor of love. This is such a good experience. I think that I'm going to revamp my main Linux workstation, which is WRX90 instead of TRX50. TRX50 is a very much better experience than it was on launch for enthusiasts, and now you can find some deals on TRX50 processors as well. And the RAM has come down, and global macroeconomic conditions notwithstanding in terms of messing with pricing, seems like we're getting some good stuff there. But I wanted to give you an update on the Looking Glass project and this milestone that we are very near to releasing. Check out the level 1 forum thread about the new improvements in Looking Glass, because this is something special. Model, this is level 1. If you have any questions, or I missed anything, or you have your own Looking Glass adventures you'd like to share in the forum, like tank operators or whatever, I don't know, hit us up in the forum. All right, I'm signing out, and I'll see you in the level 1 forums.
Sweet. Go check out the video, guys, and give it a like. Thanks to Matt from Viper for sharing that. I am gonna give it a shot, I think, for Fortnite. But there you go. Thanks everybody for watching today. Be sure to hit the like, comment, subscribe, and notification bells down below. and I will see you next Tuesday. I still have just the same outro. Don't worry about it. Where is it? Where is it? Oh, there we go.